Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this 2nd of January, Happy New Year to all of you. I hope you all had a great New Year's Eve and an amazing start into the new year so far. As always, before we jump into the markets and into my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, maybe as your New Year's resolution, is go and check out the Elliott Wave Principle. You can read this wonderful book for free by using the link in the description down below. And you can also use the same link to get yourself a physical copy. With all of that out of the way, let's jump into my portfolio. And we see we have another break even starting to today with a slight green touch this time. So a few things in order to manage my calendar or schedule a little bit better. We're gonna have a hard time limit on the daily market mastery streams moving forward. I don't think today we will exceed it, but we will limit the streams to basically 35 minutes. So today I'm unfortunately a little bit late. I'm sorry for that. But moving forward in the future, the stream will be exactly 5 minutes before the market opens. So for me, that's 3:25 p.m. till 4 p.m., so 35 minutes long. So even if we don't finish covering something during that time, then we'll just have to look at it the next day. I just otherwise don't manage to get everything else done that I would like to get done. And so that's how it's going to be for now, at least. And with that, my portfolio is unchanged. We still, our biggest position, the most relevant one, are our 600 GameStop shares, against which we have 6 covered calls that expire on the 17th. So in 15 days from now, GameStop obviously is still above 30. I believe I mentioned it the last couple of days already more extensively, but I believe that what we are looking at is either 1, 2, 3, wave 4 still in progress as a flat correction, which means we would go down, or it's wave 1, 2, 3, 4, and 5. In which case, however, we already here reached the minimum target for the 5th wave. So it's possible that instead of just getting another wave C down here, that we actually have our wave 5 top here, and we'll get another A, B, C pattern down. So there are 2 variants of labeling on the chart, at least that I can see. I might be wrong with one of them, might be wrong with both of them. Time will tell, but there are 2 on the chart that point towards we should get a correction, which would be in my favor because my option expires here. And by that time, if I want to hold on to the shares, we should be below 30, or I would need to roll my options for a future expiration or a higher strike price in order to not have my shares called away. Outside of that, if you've watched previous streams, you might notice that there are 2 more lines on that chaotic chart. I've decided to, for now, add Bollinger Bands to my chart. I actually might have to update my template. So that's without auto wave. So save as aims. Team, semilog, labels, not bar type, bar scheme. Yes, save as, and override. Because I realized while my return for the last 6 months with a little bit more than 100% was quite exceptional, it could have been better because of the timely limit of basically managing the portfolio only during the live stream, so 30 minutes per day around market open. I did not bother to time the time when exactly I sell my options or write options. And by we can remove that for now, and that actually goes here then for now. And by using Bollinger Bands in combination with Elliott Wave Theory, I should be able to time my options better. So in terms of, for example, selling my covered calls when we hit the top of a Bollinger Band, like for example here, here, or here, and selling cash secured puts when we hit the bottom of the Bollinger Bands, but only if we also have other price levels that point towards that's going to be the area of turnaround. Because obviously the calls get more premium if we would have sold them here at the top, and our cash secured puts get more premium if we would have sold them here at the bottom, for example. Yeah. So by trying to look a little bit more into that or pay a little bit more attention to that in the future, I think I might be able to have overall better returns. Now, I'm not saying that that I consider or that I think it's reasonable to assume that I will also have another 100% in the next 6 months. Yeah. I'm just saying that if I don't necessarily open my option trades during the live stream, but wait here and there a little bit and maybe even open them a day later or so, but wait for a set hitting one of the relevant levels, I might on average end up with higher premiums, which means better returns. Yeah. Anyway, so GameStop, as said, I expect a further downwards correction, ideally down to even the 24 mark. So the 61.8 retracement of this move here. If I were to be wrong here, we would still, as said, in the second variation, assuming that this is already 1, 2, 3, 4, 5, expect the correction up. What's this? That's the one for the flat correction. Expect the correction based on the entire move, which means you would still expect a downward move. I don't have the 38.2 retracement there anymore, but let's add it back real quick, 38.2. I would expect the correction down to at least 28.11. Now, for right now, we're still going to keep the other labeling on the chart, but that's are the two options. The third option is obviously that this is, again, 1, 2, 3, 4, and 5, but 5 not finished, which means there would be more upside. So we'll have to see if we start to trade a little bit lower here further. It would be additional confirmation that we indeed either finished 5 waves and are correcting or are currently just finishing wave 4, the corrective wave, before we get wave 5. Either way, 2 out of 3 possible labelings that I see right now on the 8-hour chart would point towards correction before we go further up. So we're going to wait and see with my options. Now, yeah, that's it. I'm going to have to drink something because, sorry, I've been talking a lot today already, so otherwise I'm losing my voice. Yeah, with that said, we can move on to other things. So we have Barnes & Noble Education Inc. Still believe we're going further up here. Not much more to say. We have very clear labeling, 5 waves up, 3 waves down. Question is, did we already finish 5 waves up here? Then we would now be correcting this entire move. Yeah, in which case we would worry if we go below 934. And we would really have to reconsider, because then I would be partially wrong at least if we break the 841. But overall, I still believe there's more upside to come. I don't know in which episode we talked about it in more detail, but in one of the previous ones we actually did. So you can check out that previous episodes, not the last one, but probably somewhere before Christmas. If you're curious about a more detailed analysis. Yeah, moving on. Grab. Yeah, looks like we finished 5 waves up, or at least also 1, 2, 3, 4. So we're currently retracing, but I still believe there's more upside to come. The alternative labeling would be this is a corrective wave, A, B, C, in which case we would go down from here. It doesn't matter much because I only hold one $50 call option that still would be at 100% profit right now. If I'm wrong, I will lose $50 on this trade. If I'm right, I will walk away with, I don't know, $600 to $800. So obviously not a huge amount, but a huge percentage gain. So risk-reward ratio is too good to just take profits here right now. So we'll hold this till January 26 and see if we're wrong or right. I'm, by the way, looking at a weekly chart here, so it will take quite some time for this to play out. Immersion, we broke the important level that we had here already a while ago. Now I think we should get the next 5 waves up. We'll just we're on a 3-day chart here, we just lean back and wait. However, eventually we should find the time to relabel the bigger picture. But on the smaller scale approach, I think that here I said there's still 5 waves at least to come. So a potential up to 100% return. Although, because we right now only have this labeling here, I wouldn't be able to provide you with a proper stop loss. So if you were to jump into this right now, again, do your own research, please. Don't bet your house on it, because I believe it will go further up. But if you were to jump into it right now and you want to make it a high risk reward ratio trade, you would put your stop loss at 817. So that's less than 10% risk. in comparison to 100% or more reward. So I think that still would be okay. Costs, there we're still waiting for a breakout of either the top here, ideally, which is what I believe will happen, or the bottom here, which would prove me partially wrong at least. Yeah, right now, still not the worst entry. Same situation like with immersion. One could set a stop loss at 652, which is again around 10% risk, a little bit more. And the upside would in this case be potentially 200% or more if we're right. If we're wrong, the risk is not that bad either. NEO, there I might be proven wrong in the next couple of days. Technically, if I would use trailing stop losses and so on, we already could have pocketed the 20% or more return on this move. However, I believe that there is still more upside to come. Yeah, I don't think I might have been wrong with calling the bottom, and there might be a little bit more downside. I might be completely wrong as well. One should never forget that. But again, I believe that similar like immersion and costs, actually right now could be a potentially good entry. However, here I would put the stop loss at 368, so at the low here, because at this point my pattern becomes invalid. And so, which is a little bit more than 10%. 10% is 440, so it's like 20% risk with a 100% reward ratio. So actually both cost and immersion offer better ratios, so do with that what you will. And yeah, Novavax, my options there are pretty much dead. They expire on the 17th as well. So here, and they have a $20 strike price. So we would need a miracle. I believe, however, that it will go up from here. So it looks suspiciously like we have wave 1, wave 2, and are now about to see our wave 3 up here for another 5 waves, which should take us then up in that area here. So between 30 and 60 actually. And yeah, time will tell if I'm right. I mistimed this. I thought the 3-wave move here is the entire correction. Turns out that it's more likely 3 waves, and 5 waves for, yeah, like in this case, not a flat correction. Yeah, like some other or combinative correction, zigzag, something else. Yeah. As too often, I might be completely wrong, but I believe that this is not a time. However, I would only jump or increase my exposure here if we or when we break the 1074. If I wouldn't have a position, I would jump in right now and I would put my stop loss at the low here at 681. Yeah, I think the ratio here is, what is it, 400% or more compared to 25% risk. So yeah, like it would be a tough choice for me if I would have to pick between immersion, course, NEO, and Novavax and would have no exposure in any of them right now. I would not be able to pick a single one, but probably would trade all 4. Yeah. So with that out of the way, we can, 1 second. Yeah, that's fine. So we can look at the crypto side a little bit. Yeah. Okay. Bitcoin, that part is a little weird. Doesn't fit into our pattern. This candle down here is what makes the whole situation awkward, to say the least. So because it forces us to label this as a flat correction, I don't see any other alternative, which means we should have 5 waves up, but I don't see 5 waves necessarily. And then this downward move looks like 5 waves, 3 waves, but we didn't even reach the minimum target for wave C down. We fell short of it. And then now we get this move here. So either this is just a corrective move that's prior to another decline, or I am just incapable of labeling this mess. Yeah, so I'm gonna hold our small 2,000 euro Bitcoin position further, mostly because even if we're retracing a bigger pattern, it's not a huge amount of money, and I believe long term that there is more upside. So even if short term I made a mistake, possible, time will tell. I think long term this will still pay off nicely, so I'm staying in it. XYO, yeah, it's possible that we finished our correction here, as I pointed out, but I don't want to switch the Bitcoin position into XYO because our risk-reward ratio here is much worse. I mean, the reward here would be much higher because I feel, or I think that we will, not feel, but I believe that we will go still up another, what's that, 300%. But our risk here is quickly also 50% or more. So, okay, maybe not 50%, yeah, but 30% or more. So we have much more risk here. And yeah, well, it might be a chicken move, but I think that right now staying in Bitcoin makes more sense. XRP or XRP should, in my opinion, still move sideways and down the next couple of weeks for a wave 4 before we get a 5th wave push. But then there will also be a decent upside. Storage should still have upwards momentum. It looks like we finished a correction here. So like we finished a 1, 2, 3, 4, and 5, A, B, C. So this was a truncated 5th wave, didn't reach what I expected it to reach. So potentially we should get another 5 waves up. Currently my take profit is at 80 cents. Potentially we should actually put it higher, but we will reevaluate as we get there. And H&T should move further up. Yeah, unless, yeah, I think there's more upside to come, so we're gonna hold there as well. And Algorand we also keep holding because potentially we finished a correction here and are now getting our next 1, 2, 3. So if the next couple of days are strong, then we definitely are getting another 5 waves here, and we could then, our target would be, the minimum target would be at 83 cents, so 100%. At which point I would probably sell my algo holdings, and it could then go higher, but that would be the point where I personally would consider taking my profit. At the moment, it's still possible that this is still only part of the correction and we'll get another push further down. But again, I still believe there's also another move upwards missing. And yeah, with that. Now let's see if we can get a Nasdaq. There we don't have a labeling, micro Nasdaq or E-micro. Yeah, let's see if it loads. I can have a sip in the meantime. Okay, also no labeling. However, reset vertical scaling. Let's throw this out there. Might be that we finished our wave 3 here, which means we would be retracing this. Which means there would still be downside in the Nasdaq to 20,700. Before we go further up. I mean, there would be theoretically more downside, but the first potential turnaround point, the more likely one would be probably the 50% retracement, 2,279 at 20,279. But that's, just to be clear, that's on a brief glance on the chart without labeling the bigger pattern or anything like that. So just based on how this looks. And since I don't have a horse in the race, I don't want to dedicate the time to dive deeper into that. DJT, maybe we get the chart to load today. We'll wait a bit so I can drink a bit more. Patience. And while we check that, we can actually check how my options are doing. Yeah. So the Neo calls we sold are ±0, so that's fine. Grab is still profitable. The Novavax position is set there anyway, require a miracle. And the GameStop calls are in profit, even though they are in quotes underwater, so they are in the money. And we would have to roll them. And if I would roll them like this, we actually would have a debit. And I would need to roll them for the 32 calls instead to potentially get a credit if I would want to roll. Or it says ±0. Yeah, it looks like they're evening out pretty well here. So should be a slight $10 credit or $5 credit. Okay, yeah. So theoretically, I could roll them out a little and a little further up. If I decide that I want to hold on to the shares, we will see. I will make the decision later. Do we have? No, we still don't have a chart. Okay, then we move on. Eventually we should get a chart. NVIDIA, do I? I don't have the chart open, or do I? 1 second. Okay, I'm not logged in there right now, so I cannot open the file. I have a prediction of 150 on the chart for that. So, oh, we most likely finished our correction here as A, B, C, 3 wave move, and we should now get another push further up. and the low is what's here, 126.35, 126.86. So the low would be this one. And then this is our high point, and that would be the starting point. And then we get actually targets at, so the minimum target right now would be, in my opinion, 163.30. If I would get in right now, I would set my stop loss at 126.35. So basically, if it turns out to be not wave 1, 2, and now we get 3, 4, 5 to take us up there, that we limit our risk. And if this is indeed the start of the next wave, we have still a decent reward. And yeah, what's SMCI doing? Okay, there I said I believe we are going down to the $5 mark. So I really believe this is potentially wave 1, wave 2, wave 3, wave 4, and we still have wave 5 to come. And yeah, so far a lot of those things we can get rid of a few. That one we don't need. And the zero line we also don't need. We just need the target level here, so that we hit here. So we already were right with hitting the 1838 that we predicted somewhere here-ish. And now I think 1, 2, 3, 1, 2, 3, 4, 5. 1, 2, 3, 4. Yeah, I still believe there's more downside to come. I might be wrong. This might be basically just a big wave A, and we get A, B, C, and then we go further down. I might be wrong. This might be the entire correction or so, but again, I still believe that there's further downside to come. So yeah, how's Tesla doing, by the way? They obviously had insane rallies, as so often. Then we have 1, 2, 3, 4, and 5. Did it really go that high? Let's clear the local. No, not show extended data. Clear the local data. And have it load again. Ah, yeah, that's fine. Yeah. So basically, what we have here. Did we already hit our retracement that we should hit here? I think we might get a flat correction, which will be very, very interesting. Because we should retrace, in my opinion, at least here down there. And if we get a flat correction here, we would assume that we have basically wave B that retraces between 100 and 138% of wave A. And right now we retraced 100. So here we can get rid of the zero line. So just to keep things simpler. And then if that's the case, we would expect our wave C. I have to double check the book in a second. So it's not always easy to remember every single target level. But in a flat correction, wave C usually goes beyond the wave A, between 100 and 165. Yeah, so 100 and 165. Yeah, so, and that gets us close to the 38.2 retracement. That is especially because this doesn't look like a 5-wave move, but this looks like an almost perfect 3-wave ABC, where wave C reaches the 100% target area. So if we look at Tesla, I mean, I would not short it, and I don't have exposable income, and obviously puts are also too expensive for my portfolio size. But looking at Tesla, I would actually say, if we have to guesstimate it, that, I mean, that would be the 100% assumption, yeah. But that basically by, what's that? January 26, yeah, so like January till, let's say, beginning till mid of next year, that Tesla will be down at 50. And if we would go there option-wise, we would need to pick the, let's say, 26, yeah? So we would need to pick the June 26 options, and we can see that one single option would cost 8,500, so it's like almost half of my portfolio, which obviously I'm not dropping on a single option. Even though, so if I were to buy this one and we look at the profile, and not GameStop, and Tesla would have a 30% move, then we see, yeah, the risk reward ratio for this specific option is obviously horrible. If we use option strat, which is also linked in the description down below, then maybe, so Tesla, and what did we say? We said 41.59, 41.59, and we would say next year, June, there would actually be trades that have a decent risk-reward ratio, but unfortunately, as we can see, I don't have any spare cash to play around with until we either get our shares called away or can write new calls against our shares. But that might actually be a trade worth making. So either the bear put spread or the regular put. So if we look at the bear put spread, it looks like this. So basically going below 117 would start to be into profit. And if we reach our target, so around 40, it would be $8,000 profit, but there would be a maximum. Whereas if we buy the put itself, so break even point here is 120 and break even point here is 119. And the put has a more linear approach that if we reach the $40 mark, the payout is similar, but it actually offers more downside. So like if it falls further, which I wouldn't rule out, technically, if we consider other aspects of Elliott Wave Theory, even the $10 range might be reasonable, although they're not in that time frame. I might also be wrong and we go up further here. I'm just saying that to me right now, it looks like we are having a flat correction and wave 4 isn't finished yet. And as such, we should expect further downside, and the profit areas would be, in my opinion, here 41 to 47. But we have to consider the time frame, so we're talking till the middle or till the beginning or middle, maybe even the end of next year. So, but yeah, that would be one thing. Yeah, like to maybe jump into if we free up capital. Although we first want to actually increase our positions in immersion and Barnes & Noble education so that we can write covered calls against those positions as well. So to increase our income from option premium. Obviously, we can only write the covered calls at price levels that we believe might not be fully reached. So we don't want to necessarily have the calls or the shares called away. But yeah, so, and that's pretty much it. So almost on time, 2 minutes left theoretically. Yeah, I think that's it. The important part is, as always, going to be GameStop for us for the next 2 weeks or almost 3 weeks until we have our option expiration. If we start to move below 30, it's going to be interesting in our favor. And if we stay above, it's also fine. The only situation where we start to miss out profits is if we move much higher. But even then, it's still profitable. So yeah, anyway, here's your reminder. Don't forget, like, subscribe, and enable notifications. And with that, I'm going to wish you all a pleasant rest of the day and hope to see you tomorrow with another episode of Daily Market Mastery. Till then, bye-bye.